Good morning, everyone. Welcome to today's session on the market. We are navigating a lot of uncertainty because of the recent India-Pakistan conflict and war kind of a situation. I do understand that we have mixed emotions right now: fear, anxiety, patriotism. These are all normal responses to such kind of uncertain situation. But trust me, you're not alone. We are here to be with you and get you through this market crisis. We will be navigating and suggesting means of how you can manage your portfolio with wisdom and calm. So, let me first share my thoughts basically on how humans brain reacts to such kind of a situation, and I would say it's mind before market. Now, in times of crisis, our instincts scream louder than reason, but wisdom lies in pausing before we react. Now, there was a very interesting study done uh, with people on loss aversions. So, human mind is more trained to avoid losses than gain. Uh, for example, now our brain, in a way, is wired to protect us and not create wealth. And hence, in, in this kind of a situation, when there is a situation of uncertainty and there's a situation when fear grips, how does human brain react? I'd like to throw some light. So a brain has three parts. The rational part, the top part of the brain, which is more like responsible for rational thinking, judgment, is the top part of the brain. The middle part of the brain is the emotional part of the brain, or limbic part of the brain, that they call. And in that limbic part, there is a small almond shaped kind of amygdala. They call amygdala. When there is a fear, this amygdala gets charged up. And when it gets charged up, it actually shuts down your rational thinking. And that is the reason why many a times when we act in emotion, our thinkings, our decisions are not rational. And perhaps that is the reason also when in a point of rage, people go and ahead and murder because they stop thinking rationally. So this is how a brain is wired to react in situations which uh, creates a fear in our mind, a kind of a fear which is grips our mind. Now, this is kind of a reaction which is not new. In fact, I remember when it was Kargil in 1999, when we were not in this business, a lot of my friends and client wanted to exit the market. And 18 months later, the market was up 22%. Very recently, we have seen COVID. Now, a war can damage a particular portion of India, some properties, but COVID was no less than a war. It was perhaps even greater than a war because your country goes under shutdown. It impacts life across the span of the country, and not only few people die, but large amount of people died because of COVID. So it caused a lot of financial losses and emotional trauma also during COVID. And why I'm stating this example of COVID is because the market has positively reacted and have gained back again very sharply. And during that COVID time, it was exactly 26th of March. One of my, and why I remember this client example very, very explicitly, is that he was the first client of Fincart that onboarded, and he exited in the market because his brother was in the financial industries and abroad, and he said everything is going to go down. Despite our persuasion, he exited the market. And we know what happened after that. The market rebounded from 26,000 to almost 80 plus thousand. And because reacting with emotion, when your fear center is completely flared up, it shuts your rational thinking part of the brain. And that loss is so significant that the opportunity loss. Now, why does this happen? Because human brain is averse to the idea of loss, and that's they call is loss aversion in behavioral finance. But in true sense, when I look back at all the market situation that we have seen in so many years, whether it was Cargill, whether it was COVID, whether it was the Uri surgical strike, you look at Pulwama, in all those war kind of a situation, we have actually rebounded and we have gained a lot, and we have actually created wealth thereafter. So people who uh, exited the market because of fear could not catch the market, and the opportunity loss was humongous. Now, these are the recent example. When I look at data point when the market was not very developed that time, okay, in 1965 I'm talking about Indo-Pak War, the market dipped very marginally, recovery began, and in 1 year time the market had 10% positive return. I'm talking about the 1965 Indo-Pak War. 1971 war, the it was flat initially, and then market gained 15% again. So you look at all the war, Kargil war, again the market was 22% up. So in all this war kind of a situation, yes, it is human to think of ways where you panic and you seek, you want to exit out of the market. But given the experience that we have, we feel that it comes as an opportunity. And when I look at books written by one of the best investment people in the world, like Benjamin Graham or Warren Buffett, in that book you also read that the most money was made by Sir John Franklin Templeton when the market corrected post World War II. So this is an opportunity, and this is an opportunity we should take with both the hands. Now, the best thing to do during a war, as stated by Warren Buffett, is to continue investing in great businesses. When you're investing in a fund like a flexi cap, which is comprising of large good businesses, they are great businesses. And this war, and if the market corrects, will provide you an opportunity to invest at a lower valuation. So instead of exiting, one should start acting in a way that you start increasing your investments if you really want to create serious wealth. Okay. Now, a valuation of a low valuation you will get only in times of uncertainty. When this uncertainty is over, it is impossible to get a valuation which is great for investment. Okay, so we must actually try to leverage the situation. Now, why am I saying this? These conflicts are temporary. This conflict is temporary. It may happen for few days, few months, but this is temporary. The economic engine of India is strong, and we are going to move ahead. And we have seen that post COVID also, the resilience of the Indian entrepreneur is so strong that they keep moving forward. And I'm sure that these conflict will create a short term dent, but it will not destroy our motivation to keep growing the businesses. And I'm an entrepreneur myself. This does cause a concern, but it does not take away my zeal or enthusiasm to keep growing the business forward. I think that's how all entrepreneurs in India will think. And we have seen that in COVID, that without much government support, we grew very strongly. And I'm sure this will just be a minor setback and we'll come strong. Your SIP. So, what should we do in such kind of a situation? I will only say people who have goals coming in the come 6 months to 1 year time may try to exit the market, because it is next to impossible to predict the intensity of the damage that will can happen, because it is hard to predict any such kind of a loss at this point of time. So if you have goals arising within 6 to 12 months, please feel free to discuss with the advisor, wealth manager, and take a calculated call of exiting some portion of your investment that is free of exit load, that is free of your short term capital gains tax. Let us behave rationally in such kind of a turbulent situation. For people who are funding the medium term or long term goal, I would say there is no reason to worry at this point of time. We are investing via SIP, and that's a great instrument or mode to invest in good times and bad times. When your SIP comes in bad times, it will be averaging, and it will be helping you gain from the market downturn as well. So, my humble suggestion is we have to uh, take a very prudent approach in terms of trying to manage our portfolio. So, first, I said if you have short term goals, you may want to take a calculated exit. Two, continue your SIP and STP. Now, if you are somebody who is really worried, see, each investor behavior is different. Each investor risk appetite and risk profile is different. Uh, so it is not wrong. It is who we are, and we should be appreciating that without an iota of judgment. There's no right or wrong decision here. If you are a conservative risk profile investor and you do not want to take much of a risk, you may try to prudently take some part of your profit, but please do not try to time the market. Even if you're booking profit, the money should be immediately invested via systematic transfer plan in back into those investments, because when the market corrects, you'll be benefiting from that. And if the market does not correct, you will still participate in the upside. Okay. Why I am saying this? Equity may deliver say a 12% return, but if you switch from to STP to liquid fund, that will deliver 7% return. At least there will be some money that will be made, and then gradually you will catch up. So there could be a prudent way of managing your money instead of reacting in a harsh manner. Okay. So this is one of the strategies that you could do. People who can ride the volatile market and will not lose sleep over this kind of a tension that is brewing right now, they should stay invested. Rather, I would say they must stay invested. On the contrary, you should keep some amount of your cash ready for investing further in the market if the market corrects, because this will provide you with a great opportunity to enter the market at a great valuation level. Now, having said that, I feel that this is uh, a situation where we need to wait and watch, and act prudently. And this is not the first call that will happen. If this kind of a turmoil is there, I will be appearing to you on a more frequent basis, on a regular basis, to ensure that we navigate the market situation with a lot of accumulated wisdom that we have over the years, and more from a rational thinking rather than emotional thinking. So this is all I have to say, and I would be happy to take question if there is any that you have. Team, is there any question people have, or you would want to post the question here in the comment section? Uh, okay. Uh, Ravi, if there is no question, then we will possibly try to uh, close this call. What's up in stock holding? About of stock holding. Okay. See, great companies, if the company is good, I do not mind holding. The company is good, fundamentals are good. Unless you're buying in some penny stock and trading, difficult to hold. If it's a great quality company, you should hold. What percentage of cash should be kept to take advantage? See, if you're holding 10 to 15% cash, that's good enough to take advantage of the portfolio of the downturn market. No, okay. There's a question. Very good question. So your advice is to exit from SIP for short-term goal? Not at all. SIP must continue. That's the power of averaging. If you actually stop SIP, you lose the power of averaging. Please do not stop your SIP. What if the war escalates and how much market can correct? See, it's hard to give any number to market correction. Anybody who has given in the historical past predicted the market have been proven wrong, so we will not do the mistake. Okay. uh, is there any impact on a long term debt rates? See, they may be a temporary impact, but on a long term basis, if the economy gets a dent, then it becomes all the more reason for RBI to cut rates to boost the economy. So I think it will be a positive from debt fund from a long term perspective. From a short term perspective, it might cause a little bit of yield rise, but that will be a very temporary phenomenon. Your view on gold? Yes, gold allocation in any kind of a turmoil situation is good to add. We have been recommending gold for a long time to add about 5-10% of your portfolio. That should be in a part of a portfolio to have gold in your portfolio. On the contrary, other than gold, I think if the silver corrects to 100,000 lakh rupees, I think silver will be a good addition at this point of time, because gold to silver ratio is favoring silver investment at this point of time. You can look at silver investment. I've answered on gold. I think Abhishek already. Should we invest in sector? Okay, that's a very tactical call to have on defense sector. There are a lot of other fundamental factors that goes into that. I would refrain from taking a sectoral call, because I have never advocated sector or a theme as an investment, because that's very very tactical and that may not work in favor. Is a good stiff lump sum towards the US market? Not, I'm not too sure. I'm feeling that the way the new government in US is moving, if they extend this kind of a situation, then it may cause a situation where the US might correct in times to come. Okay, and if that were to happen, your US return will get diluted. So hence, I would not suggest adding US at this time point of time. Rather, I am most bullish on India at this point of time. My MF is on negative for the last 2 years again due to escalation. Is it should I exit or take advantage? No, take advantage of investing in direct equity. They could investing in direct equity is a very different ball game, and compared to if you have mutual fund, it's not that mutual fund is maybe you're investing more toward the last 6 months when the market has corrected. Otherwise, last 2 year investment is not negative. If maybe the bulk of your investors is more in the last 6 months when the market corrected, have patience, Gotham. Investing in equity market, you have to have a long term perspective. You will be surprised with the amount of wealth that India will create in the next 5 to 7 years. Okay, we are on the sweetest spot. Okay, from global perspective, the only country that will give you exceptional growth is India, and even ahead of China. Okay, China is very opaque. India is a very transparent economy. I think I'm very bullish on India at this point of time, and I feel we should be investing. Okay, now historically, I'll give you one very important data. If you look at any bear cycle in India, it's barely for a period of about 44 days on an average over the last many years. So you will have a bear cycle. The bear cycle is always a short bear cycle, but the bull run is more. So anybody who's been a bear in India market has not made money. Okay, it is the bull who has made more money in the market. So all I'm saying is have faith in the government, have faith in our Indian army. I'm proud to be in saying this because I feel that we will be able to manage the situation well, and you realize that you will create substantial wealth in times to come. Can there be possible upside? Yeah, of course. I'm. That's what I'm saying. Historically, not only in this recent war, right from Indo-Pak War in '65, the '71 war, the Kargil War, the Pulwama, the Balakot, the Uri, all those war you see in each and every war situation you've seen, the market has been recovered between 15 to even 25% post that war within a period of 1 year. So I think that's the kind of opportunity that you have. And I don't see any reason why the Indian company will lose its competitive advantage or sheen because of this small war out here. Okay, I'm saying small because the conflict may be limited to few geographies, but when it compared to COVID affected the entire span of the country. More people died in COVID than what I think it will envisage at this point of time will die because of the war situation. I'm hoping that we'll see an end to this conflict soon. It's hard to predict any number, but historically, what we have seen is anywhere between 10 and 25%. The market is positively corrected, one up post the war settles down conflict. And not only India war, we have seen the Russia-Ukraine war, we have seen the Israel and Palestine kind of situation. The market has been very, very resilient. What's your recommendation on MF versus unlisted? See, unlisted will be least affected because there is no active market rate. So that's the advantage. See, anything that you cannot act upon, the damage is less. In an open market, when human can act very, the damage is more. See, what is very ironical when the market corrects that somebody is selling. And why does it correct sharply? Because there are limited buyers and the price corrects very sharply. But there is some buyer, right? Now that is the buyer who makes more money. So you just decide you want to be on the sell side or you want to be in the buy side who will create wealth in long term. The choice is yours. Will there be a change in Indian market as well, like Russia had during Russia-Ukraine war? No, not really. See, Indian market is far more diversified. See, if you really look at the Russian market, if you study a market like Russia and Brazil, these markets are more commodity driven. Okay, and whereas if you look at India, we are a fairly diversified economy with manufacturing, with services, with agriculture. All this adds to the diversity of the economic engine that we have, and I think we are far more better placed than those kind of countries. uh, do you do situation like this no, not really. I mean, see, you're not losing job. If it was COVID, I would say yes, you might need a higher emergency corpus, because if you're out of job, if your company sacks you or lays you off, then you might need more emergency number. In a situation like this, I doubt that you will need to increase your emergency corpus. I don't think so that's required. Okay. But what you could do is that was situation if it escalates, we may have situation like in the north part of the country. If you look at, yesterday I got a call from one of my wife's friend. My She got a call rather. She's a school principal. She was sending a note to shut the school down. Entire night there was a blackout. So the question is, those kind of situation can cause a lot of emotional trauma and thing, and it may slow down some business for some time, but it will not create an overall impact that you need to increase your emergency corpus. Have cross-border tension impacted capital inflows? FDI, yeah, it temporarily does. For example, but on the contrary, if the market valuation is low, FIs are emotionless. They come and they invest in a hurry and they exit in a hurry also. So they are tactical investor. They trade. So their movement is very very different. But given the current situation, I feel this will not impact much at this point of time. FDI for sure not, because FDI people come for a long term perspective. They come for the merit what the Indian economy offers to those people in large, and I don't say FDI will get affected. But yes, FII investment or portfolio investment temporarily might get affected, because people they are of a trading mentality. They come with a tactical investment and they want to exit the market and come back very as sharply as things settle down. So, but normal investors would fail to catch that speed, and hence I strongly advocate that normal investors should avoid taking such kind of a stance with their own investment. I started investing last month. Should I be concerned about? Not at all, Sandra. I think just stay invested, have faith in the economy, have faith in Indian Army, and we'll overcome this. Not required. You should not take your investment back. On the contrary, you should start investing in India. These loss are temporary, but the future gain will be permanent. These, I repeat, these loss are temporary. The future gain will be permanent. And I'm telling you, this human minds are always tuned to more kind of a behavioral mistake. Please do not make those behavioral mistakes. In fact, if you really want to learn a book, there is a book called Behavioral Gap. The market is given this much of return. Most investors have made less money. Why? Because of their behavior. So we need to manage our investment and our behavior. Our behavior is more responsible whether we will create wealth or destroy wealth. So please stay invested in such kind of panic. That's the reason why I hear we will navigate you through your tough situation. With all our expertise, we'll navigate you, we'll course correct your portfolio to ensure that you, at the end of the day, create wealth, achieve your life goals confidently. That's a promise to you. Where should we reach out to understand ideal allocation and planning? Of course, you should reach us to us, Fincart. We are the best one to help you out. How do geopolitical tension influence fund allocation across sector like defense? That's the fund manager called to do that, and they will do prudently. But that does not see. I repeat, these sector allocation, sector rotation, or tactical allocation is not a sure shot way of actually creating wealth. Now, it might not. Okay, so all I am saying is that stay rooted to the basics, and the basics says you should follow your asset allocation. You should follow your core part of your investment portfolio, which is towards equity and which is more towards general flexibility and not towards this tactical. If you have great insight on those kind of a sector at tactical exposure and you're very confident, by all means go and take it. And as a fund, as a company, we do not advocate tactical play in any sector or any theme. and I would refrain from that. My apologies if I am not be helping you on that side, but I am more concerned of creating your wealth in a sure short way than playing around with your money. That's the last thing that Fincard will do at this point of time for you. Okay, any we like to have more question if you have, and if not, then we like to cut it this discussion out here, close the discussion out here. And I would thank you all for participating. uh, Me and my entire team are here with you in this troubled times to navigate your portfolio through this market volatile situation. We will do increased review call with your portfolio. That's our promise to you, and we'll ensure that we answer each and every question and query that you have. I would reiterate that there is no question as a foolish question. Okay, please feel free to clarify all your doubt that you have in your mind, because we are not only managing your money, we are accountable for your money, and we would want to manage the way you want to your money to get managed. Okay, there's one more question which has come up. If we want to invest more, should we make any changes in the current investment plan? See, if you want to invest more, stagger it over a period of time, because we don't know what they. Yes, you should start talking to your investment advisor. Based on your allocation, they'll suggest the best possible allocation plan to you. What about crypto market? I'm sorry, Yogesh, I'm not a crypto expert. I don't have a single rupee invested in crypto. I'm maybe the old school thought. You can see my gray hair, so I'm a little off crypto market. A lot of your Gen Z friend will give you better advice on crypto than I do. Okay, anything I can't do rational valuation, I stay away from that. So let me give you. When you do investing, there is something called discounted cash flow. You project what the market is going to be, discount it to the current valuation, and arrive at the discounted cash flow. That's the rational way of valuing the market. In a crypto market, there is no such kind of a valuation, and anything that I can't value, I stay away from it. I don't invest. Can we shift debt to? No, I think debt will also give you a good opportunity to invest. So keep your asset allocation at this point static. If the market corrects beyond from, and why I'm saying this, if the market corrects beyond 10-15%, then you shift to debt to equity. Don't do it right now, because your debt is equally good at this point of time. Okay, guys, thank you so much. I really appreciate your thing. Yes, we have a team of about 110 advisors, and we train them very rigorously. And more than 50, 70 of them have spent more than 5 years with us, 3 to 5 years, between 3 to 5 years. And they are all incredible, because they not only know the subject on finance, they are trained to manage your goal. To me, what is more important, and this is a very famous statement, my team will always know this. We live by this statement. I am going to make it here publicly. People do not care how much you know, people want to know how much you care. And at Fincart, I take pride in the fact that we care about you, we care about your goal, and we care about your well being. And we'll do everything possible to help you navigate through this tough time and achieve your life goals. Thank you so much, ladies and gentlemen. And I think we'll close this call here. We wish you all the best, and God bless you all. And we hope that this uncertainties and the conflict gets resolved very soon. From humanity perspective, my heart bleeds for people, even for the armed forces who are risking their life, people who are risking their life here on the borders around the area. My prayers with them, and I wish my all fellow countrymen to be safe and sound. May God bless them all. Thank you, Simon. Thank you, everyone. Thank you for joining.